Welcome to today's market report.
Wall Street rallied on Monday and the Nasdaq reached an all-time closing high as sentiment was boosted by full FDA approval of a COVID-19 vaccine, and market participants looked ahead to the Jackson Hole Symposium expected to convene later this week. All major three US stock indices ended the session sharply higher, with surging crude prices driven by expected demand growth, putting energy shares out front. This has been the script all along, according to Spanton Capital Securities in New York. We make new highs, pull back, and then we're off to the races again. That tells me the fundamentals are in place. There's worries out there, but it's hard to keep this market down. The US Food and Drug Administration granted full approval to the COVID-19 vaccine developed by Pfizer and BioNTech in a move that could accelerate inoculations in the US. Full approval means that there's most likely going to be more mandates. More companies will mandate that you have to get the vaccine in order to get back to the office. I don't think this will get all the adults vaccinated, but this news today will probably drive the vaccination rate closer to 75%. Pfizer and US-listed shares of BioNTech advanced, as did rival Moderna. Spiking COVID-19 infections caused by the highly contagious Delta variant have fueled concerns over a protracted recovery from the global health crisis. Data released on Monday painted a mixed portrait of an economy inching back to normal in the wake of the most abrupt contraction in history. Sales of pre-owned homes unexpectedly increased in July, according to the National Association of Realtors, while a report from IHS Markit showed business activity accelerating this month. The Goldilocks portrait of an economic recovery headed in the right direction, but not robust enough to warrant a change in the Federal Reserve's dovish monetary policy, helped feed investor risk appetite. Market participants locked to the Jackson Hole Symposium, due to convene in Wyoming later this week. Fed Chair Jerome Powell's comments will be closely parsed for clues regarding the central bank's policy tightening timeline. Unofficially, the Dow Jones rose 0.61% to 35,335. The S&P gained 0.85% to 4,479. Nasdaq added 1.55% to 14,942. Surging crude prices pushed the energy sector to its best day in nearly 2 months. ExxonMobil Corp and Chevron Corp also gained on the day. US-listed shares of Trillium Therapeutics soared after Pfizer agreed to buy the cancer drug developer in a $2.26 billion deal. General Motors fell following its announcement that it would take a $1 billion hit to expand the recall of its Chevrolet-bought electric vehicles. Crude oil WTI was up 5.36% at $65.47 per barrel. Brent was up 5.28% at $68.17 per barrel. Gold futures was up 1.29% at $7,807.10 per ounce. On the FX front, GBP/USD is currently trading at 137.24, up 0.77% after rallying from a low of 136.06 to score a high of 137.24. Risk sentiment across markets has picked up, benefiting currencies correlated to risk, such as sterling, and weighing on the US dollar. GBP had its worst week in 2 months last week due to worries surrounding the Delta variant that has started to derail the global recovery potential. However, Friday brought some relief to the market when sentiment shifted surrounding the prospects of a Fed taper announcement as soon as this week. Dallas Fed President Robert Kaplan, among the U.S. central bank's most forceful supporters for starting to reduce support for the economy, said on Friday he may need to adjust that view if the Delta variant of the coronavirus slows economic growth materially. His comments removed a lot of anticipation surrounding the Jackson Hole and expectations of an imminent taper announcement, exposing the US dollar to a reduction in speculative positioning. The pound has corrected a significant portion of the previous slide, all the way to prior, supporting a strong 61.8% Fibonacci retracement. The bar remains low for downside continuation while below the 138. So long as the dollar index stay above 93.
This is today's market news. Thanks for listening. We'll see you next time.